this week received CPI, which is Consumer Price Index, and we received PPI, Producer Price Index. Basically, there's a big dichotomy, I guess, between these two numbers, and that's what we're going to focus on. Hope you're enjoying your Thursday. We have July inflation numbers in this week, and we have a ton to cover around these inflation data points. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered after every interaction. And we set up these weekly webinars, hopefully to weed out some of the noise around all the data we're receiving lately and really make sure that we're focused on the things that are moving the markets the most. And this week, again, we have a few things to cover, but we're primarily going to talk about the inflation numbers for July because there is a lot to unpack here. So we this week received CPI, which is Consumer Price Index, and we received PPI, Producer Price Index. So consumer, right? Us as consumers buying things, producers, us as producers, businesses selling things, right? So basically, there's a big dichotomy, I guess, between these two numbers, and that's what we're going to focus on. So on Tuesday, we received CPI data, Consumer Price Index data. And remember, there's always two numbers to be aware of. There's the headline number, which includes food and energy, and then there's what's called core CPI, which takes out food and energy because those are typically more volatile, okay? So on Tuesday, CPI numbers came out. We were up 0.2% on the headline number, and then the core CPI number was up 0.3%. Both were right in line with expectations. Both were a slight tick up in annual core CPI. And the markets love this. Markets reacted really positively with stocks increasing, basically due to bets that the Fed will cut rates because they were mostly in line with where we've been and really what people had expected ever since they kind of stopped the rate changes. And it showed no surprise upside in inflation on Tuesday. We were at these same levels back in February this year and even higher in January. Core was higher every month looking backward on an annual basis, except the most recent 4 months, March, April, May, and June. And if it helps just to break this out a little bit, core was primarily up due to used cars, trucks, and services. And more specifically on the services was transportation and medical care services. The headline was also up, obviously, although slightly less than the core. And obviously, the same factors carry into the headline number. But now we add in oil prices as well, which played a bit of an impact there. Okay. But then fast forward to today on Thursday, and we received Producer Price Index numbers. And the PPI numbers were up 0.9% on the headline number, 0.9, you heard that correctly, and 0.6% on the core Producer Price Index number. So both of these were a huge surprise here, not just in terms of expecting maybe some higher numbers, because that was already baked in as well, but they surprised even what those higher expectations were, right? A big impact came primarily from trade. So probably no surprise here. This was the biggest impact on both numbers by far. Although a few other items did kind of play into this as well, certainly were higher and played a role in these total numbers. Again, the primary one, the largest number with breaking that apart was around trade. So remember, the PPI measures producer prices. So the question now is, will this higher price be consistent? Will we see it for a while? And will it be passed on to the consumer? And this is why markets are down slightly today, is with this and concerns that really the Fed may not cut rates after all because of this higher inflation print. Markets are kind of curious, I guess, about what's to come. Again, I think on Tuesday, the market said, okay, Fed's going to cut, and we saw a bit of a rally. Here on Thursday, I think the market is in a way saying, well, maybe the Fed won't because this is a higher number. And as a result of that, maybe seeing a bit of a pullback, although it's not too extreme at the moment anyway. Okay, so that is kind of the inflation data in a nutshell. And again, very, very polarizing data points here. And I think that, again, the reason the markets are probably concerned about what the Fed might do now because of this data point today on the producer price index number is because they have been very cautious. And the idea that even just one data point might suggest a higher number, if this was 0.3% or something like that, maybe we would see a rally continue. But I think given the significance of that number and how much higher than expectations it was, that's where maybe the pause for concern comes in. Although keep in mind, if the Fed is cutting rates, that's often not for good reasons. So take that with a grain of salt. Typically when the Fed cuts rates, it's because there are challenges. So I guess we got to be careful what we wish for as well. For what it's worth, I will also mention initial jobless claims today. It came out today at 224,000. So again, this week was just full of inflation for the most part, although jobs is important. The inflation numbers kind of took the spotlight here this week. Now, be sure to tune in next week. On next Thursday, we'll cover retail sales that we get tomorrow, as well as the Fed meeting minutes on Wednesday. That one is going to be really important to watch, especially given this higher PPI print here today. We'll definitely want to see what's going on, kind of behind the scenes in between the lines there in the Fed meetings. For a question of the week, I'm actually gonna broaden this out a little bit. The original question of the week was around trade updates, but I also want to touch briefly on this inflation story. So I'll start on the inflation story. And what I wanted to address on this is, what does this mean for inflation? And what I'll share is that I think, keep in mind, it is very early to say. Again, primarily a lot of this came from trade. The question is, how will that be handled as time goes on? Will we see this as a consistent challenge? Was this a July challenge? Because this is the first time we've seen this huge impact. And that remains to be seen. Now, what I did want to touch on briefly is how important money supply plays into inflation, because we may see these spikes, we may see certain areas pop here and there, but in general, if we don't have more money to spend, it may not necessarily mean that these inflation numbers stay elevated, at least to this degree, forever. Now, I do still believe that we'll see higher inflation, this kind of 3-ish range that we've been in for a while. But in terms of these giant numbers, I think that we'd want to kind of keep an eye on money supply to see how that might translate to a more sustained inflation scenario. Again, we'll continue to watch it. This is definitely something to keep an eye on after this PPI print. But generally, we want to watch money supply in relation to this as well. And then lastly, I will share a quick update as far as trade goes. Trade obviously is back in the headlines. The tariffs are back in the headlines. So I did want to cover this quickly, excuse me. But in short, basically the two things I wanted to highlight is India and China. India has seen increases in tariffs as of late, and seems to be more recently a bit of a pawn in the Russia peace talks. So we will see how that goes. I would say this is one of the more volatile areas, especially if this is a pawn again in those Russia peace talks. It's hard to say exactly what this will mean, but just keep in mind, we've seen this time and time again. What is said may not necessarily be what's carried out. So this is where that speculation part of it comes in, and it's hard to say exactly where we're going to land and what the impacts are. So we really want to see that before we go too far with that. The second one would be the China tariffs. China tariff deadline was pushed off a bit further again, so pushed off by another 90 days. So those are the two that I wanted to cover there. Again, ton of stuff on the inflation side of it, so I wanted to spend enough time on that front. But be sure to tune in next week, because again, we will cover the Fed meeting minutes from the last meeting there, which are going to be critical given especially what we saw here today on the producer price index number. Have a great upcoming weekend, and we will see you next Thursday at 3.